Welcome to Crypto in America Live, the only show bringing you candid conversations on the biggest news stories, legal issues, and policy developments shaping the crypto world. Every Friday at 12 p.m. Eastern. We're your hosts, Eleanor Terrett, Jacqueline Melanik, and Gerald Gallagher. You may know us from our weekly podcast, Crypto in America, and of course, our newsletter, but we wanted to bring you something a little bit different this time.
Amazing. Hey, guys.
Hey,
So
this is super exciting.
Yeah, so excited.
I love the intro and the process here. We're real people now. This is
if
awesome.
we could describe to you sort of like what just happened, we were waiting to go live, and we have sort of a live production team behind this whole thing, and it is very TV news studio, whole control room sort of behind us, and it kind of felt like a countdown to like NASA, right? It's very intense, and as you guys probably heard while you were waiting for us, that countdown music was even more intense. So we're fired up and we're ready to go.
Yes, we're very excited to do this for sure. I think, it's been a couple weeks, months in the making. We've been talking about this for a long time. Obviously, the podcast side of things is a very formal sit-down interview with a lot of the leaders in the space. But for us, we really wanted to do something that was different. We wanted to talk about the news of the week. We wanted people to actually get to know us a little better, because a lot of times we're just doing question and then letting the guests really run with it. And also, we also wanted to bring on guests in a different format. I don't know if you two feel similarly, but I'm pretty sure you do.
Yeah, I think it's been incredible just doing the weekly show and all the great guests we've been able to do, all the segments we've been able to do, all the people we've been able to talk to. But what we needed was something a little more dynamic to catch issues going on in the week, to get more of what we're thinking about and what we're dealing with. As Ellie gives us scoops every 2 hours, I feel like we needed a new place to jam on all this. So really excited about it.
Yeah, exactly. And then obviously we want to have more voices on the show. With a podcast, we've typically just been having one guest per week, but with a live stream format like this, we can have 2 to 3 guests. And today we will have 2 to 3 guests, which we're super excited about. So Gerald, why don't you tee up who we're expecting this hour?
Yeah, absolutely. So on the topic of being topical, we have David Kerr, who is the founder and principal of Cowrie Advisory, to talk to us about DUNAs. We have Mike Cahill from Douro Labs and Pyth to talk about bringing economic data on chain. And then we're going to round it out with a little lawyer-to-lawyer discussion with good friend Alex Zozos, general counsel at Superstate, about bringing GLXY shares on chain, which is huge. And I can't wait to dig into that one.
But before we bring them on, let's get into the top stories of the week. So I'm super excited to do this because as part of my weekly newsletter, usually on Fridays, I do the weekly recap, and they're usually the top. It kind of varies. This week was maybe a little bit of a stunted week just because it was the week after Labor Day. So not too much going on, at least for crypto. There was still a lot going on, but for crypto, it was definitely more of a short week. But we'll start off with my personal favorite story of the week, Gary Gensler's vanishing texts.
It's like a cartoon villain at this point. Yeah.
Yeah. Literally. So what happened there? I'll give you the quick abridged version. Gary Gensler, former chair of the SEC, a bunch of his text messages from when he was chair have disappeared. An internal investigation conducted by the SEC Inspector General found that avoidable errors and a botched IT wipe of the former chairman's phone permanently deleted messages from October 2022 through September 2023. And if you think about that timeline, guys, right, that was really the height of the crypto crackdown the agency engaged in. And I think, as we've seen from people on Twitter's reaction, they're none too happy. I mean, we talk about confluence and conspiracy. We can talk about, coincidence, but it doesn't look so great for the former chairman. I don't know about how you guys feel about that.
Listen, if I'm deleting texts, there's a reason I'm deleting them. Whether or not I slipped a couple money to a IT guy, I don't know. But I don't know. I don't think it's the best look. And I know they reviewed about 1,500 messages that were recovered from colleagues and other records. And they determined that majority of them were federal records. And about 38% of the recovered texts were mission related concerning matters. But I just don't feel this is a good thing, obviously. And it's just, of course, this happens with Gary Gensler. I wonder what he said. Honestly, I wish we could get the messages.
I think avoidable errors is just an incredible way to to explain it. Like it's, you know, it's just, it was avoidable, but it happened, but we're just, everybody move on.
Yeah.
It was
Quickly,
also the timing of it.
look at the timing, because like I said, the timeline is between, it was that crucial period of the crackdown. But on Caitlin Long's tweet, she does call out some of the things that happened during that time. You've got Choke Point 2.0, you've got the liquidation of the regional banks, you've got the what is it called? The SEC's gosh, the name is escaping me now. Gosh, what is that thing?
Well,
that
if you start with FTX, and I think the industry has speculated about that relationship a lot, so we don't need to rehash kind of all the, you know, the like connect the dots, you know, kind of meme there. But like if you start a month out before FTX, basically what you're describing in this run is like you could not have bookended a greater sort of highlight reel of like just down bad for the industry. And just looking at this, it's like to not have a record of any of this is incredibly frustrating. Like it's, you know, we need to know, we know relationships existed. And, you know, I think Caitlin is among those who have been kind of validated with Choke Point and some of the other positions that, you know, Nick Carter has taken in the past as well, where like, you know, we're not tinfoil hat people. And so like, this is sort of just like further evidence that it was pretty proactive, and obviously like we're just never going to find out exactly what was said, you know, in that time period, which is a huge bummer.
Right.
Yeah, they also didn't even they didn't even report it until about 4 months after they erased it too. And then they started looking into it, and now we finally get it like over 18 months later that it comes out publicly. It's kind of like, oh, it's old news now. But if we found out at the time that all these messages were erased, it would have been a very different story. And he probably would have honestly gotten in a lot of trouble for it at the time.
Yeah. And someone pointed out, if you were the CEO of a public company and this happened, you would face pretty serious questions, right?
And,
Doesn't everything get uploaded to the cloud these days? That's a good question, but I would imagine inside the government, maybe it's a different story with a lot of security measures.
No, definitely unfortunate. I know we got a lot to cover.
We'll move on.
Yes. I'm happy to talk about the next big news story of the week. Gemini and American Bitcoin IPOs are coming in. You know, the said crypto IPO season is going to be hot, and it has not disappointed. On Wednesday, American Bitcoin surprised the world when it went public on NASDAQ. Shares soared as high as $14.52 in the first day, and I believe they've dropped since. And its IPO price was about $6.90. And then we also heard that Gemini is going to IPO soon. And yeah, I mean, it's been a busy season for IPOs. We had Bullish back in August, I believe, as well as like the Circle listing, which was very well received initially. What do you guys think?
Yeah, I mean, look at that. So 5 days, they're down 33%. Okay. I mean, it IPO'd at $6.90, I think. So it's up a little bit today.
Slightly up.
Yeah.
And I think, look, like the public markets are open, right? I think you've seen all like the digital asset treasury companies excited to dig into some of these strategies. You know, American BTC, obviously more of a mining focus. I think Circle really unlocked a lot of enthusiasm for crypto in the public markets off the back of Genius getting, you know, signed into law. And we'll see. Like it's hard to separate out what investors think about individual sort of companies versus macro volatility, right? Like it's been kind of a whipsaw throughout this administration, just with, you know, tariffs and everything else going on. So it's good to see opportunities to get out into the public markets and get that liquidity, and we'll see what happens.
Yeah, just something that stood out to me quickly. I think we do have a chart to show, but Gemini is actually very, very small compared to its competitor Coinbase, right? I mean, Coinbase is the biggest US exchange, but in terms of revenue, I think 2024, right? Gemini posted $142 million compared to Coinbase's $6.3 billion. So it will be a smaller IPO compared to obviously a Coinbase or a Bullish. But, you know, like you said, Gerald, it's them tapping the public markets, taking advantage of all the positivity, especially in the regulatory legal space around crypto these days. So they're the Winklevi.
They are the men themselves. I think it's also for a platform like Gemini, this is maybe a good segue into what we're going to talk about next, but the Coinbase fought a lot of legal battles, kind of continued their path forward, ever since they filed that S1, to go public. And so we'll see if regulatory clarity kind of brings more assets on chains for some of these exchanges. It could be interesting to see like the growth story there long term if they get regulatory clarity there, or if TradFi just comes in and eats everybody's lunch. We'll see.
As they so
They
often
could eat crypto's lunch if it just makes price go up. Everyone would be happy. No. Different terminology, sure. Yeah.
All right, let's get to the next one. The SEC and the CFTC have been busy this week, but I want to kick it over to Gerald. I want you to highlight the joint statement that they put out, not today, because they did do one today as well, but from earlier in the week that had to do with the spot trading. Why don't you take it away? Because you had a great thread on this, I thought, and an interesting take.
Yeah, no, I appreciate it. And by the way, just an Ellie retweet does wonders for the numbers. I've learned, so I appreciate you highlighting that. No, it's I think like this is exciting. Really, to see the SEC and the CFTC kind of rowing in the same direction. I've joked in the past that they're kind of competing over who is more pro crypto these days. Obviously, the biggest sort of difference here is the SEC under Chair Atkins and even under Commissioner Peirce were rolling out this crypto agenda really aggressively, and going all the way back to even meme coin guidance from Commissioner Peirce at the start of the year. They've just been on this like march forward of we're pro crypto, and then the CFTC has been much slower to act. They've had Commissioner Pham as acting chair since the beginning of the year. So a little slower to act, but a lot of the market depends on clarity between digital assets and commodities and treatment of securities. So basically, at this point, this is the first time we've seen the SEC and the CFTC be kind of lockstep on putting together a framework for registered digital asset trading, both spot, perp, and futures products in the U.S. And a lot of my legal colleagues are quick to point out that nothing has actually changed yet, right? And we have this conversation all the time. They still have to go do the rulemaking. Some of the activities that they contemplated in that letter were already technically permitted, but the industry was kind of confused over how this is going to end up with clarity. We've seen the ancillary assets fight kind of happening, within the Twitter sphere and elsewhere on whether or not we get a different definition coming out of the Senate's version of clarity. So to see the CFTC and the SEC rowing in the same direction is great.
Awesome.
Yeah.
Hey, that was a beautiful summary, Gerald.
It was, yeah.
10 out of 10. We should give ratings on how we do when we bring up the news.
That's what the comments are for. Yeah, I should mention that we do have live comments, guys. So if you want to drop some comments, I know we, here we go. Join the conversation in the chat and we will discuss your comments on air. So feel free to do that.
Eleanor is big.
There you go.
We should discuss that one.
Thank you.
The fan club has started.
There we go.
All right, we got one more story before we get to our first.
Okay, yes. The last story that we want to discuss is that Polymarket is officially set to return to the US after being banned for more than 3 years. The CFTC issued a no action letter granting relief to the QCET, the derivatives exchange Polymarket brought this year. And it comes right after Donald Trump Jr. joined the board. Coincidence? I don't know. Who's to say? But I mean, Polymarket is a massive market. That and Kalshi, are the two biggest prediction markets right now. So having it come back to the US after a pretty rough election period for them is honestly optimistic, I think. Because if you guys remember, Shane Copeland, the founder of Polymarket, I believe he had his whole apartment searched and things were seized as a result. And obviously he, took to Twitter and was pretty upset about it at the time, but they basically thought it was kind of like manipulation of the election. Because I believe they called it before it was even done, if I remember correctly. Do you guys remember that?
Yeah, I think this is a really interesting kind of implication of like wisdom of the crowds. Everybody, I think even when you're on crypto Twitter, you're sort of wondering like, is this actually alpha, or am I like behind, or do I live in like some kind of a bubble? And so this is a weird case where I think the crypto community was kind of like right on point with judging sentiment in sort of the wisdom of the crowd. Polling, kind of famously inaccurate, doesn't go super well, is biased. Like a lot of people talk about, who actually answers the phone, when somebody calls you and says, "Hi, what do you think about this issue?" So using prediction markets to gauge outcomes of events is like really interesting just for accuracy of data. And also I think there's a market here.
Can I ask you, with your lawyer hat on, what's the difference between, say, a Kalshi and a Poly market over like a FanDuel or a DraftKings?
Yeah, so I'm not the biggest expert on this. So if since we're live, we can't go back and edit out my inaccuracies. You guys will forgive me if I get any of this wrong. But essentially, the reason that a prediction market is not gambling is it's basically structured as like a binary options sort of contract. That's also why it comes under the regulation of the CFTC and not like a gambling regulator. So the outcome is either it's weighted, it's dynamically weighted. So the sum is $1, and that's the event happening, versus basically the dynamic pricing as opposed to like a line for a bookmaker. There is no one actually controlling the odds in a prediction market contract. It's just the amount of money that goes into it. And obviously like bookmakers will adjust odds on the back end in traditional gambling, but there's someone sort of putting out the bet and the odds, the line that they're willing to take. And then that dynamically shifts with the amount of action on that, versus a binary sort of prediction market contract is literally just driven by price and demand. And it's like a two-sided marketplace rather than sort of a bet in the traditional sense.
Mm-hmm. Gotcha. Now that it's available in the US, would you guys use it? Like, would you go on Polymarket and bet on anything? I don't know.
I think it's fun to see new Polymarket things like pop up, like will XYZ event happen? Like, and we know that like America loves the casino. So I think we'll continue to see it.
I think it's funny when Polymarket bets on its own outcomes, right? And it's like, will the CFTC let Polymarket trade in the US? Like Polymarket has a market for that.
Yeah.
It's funny. Yeah. Amazing.
Yeah. Well, that wraps the news segment. That was fun. I'm looking forward to doing that every Friday. But let's bring in our first guest to ever join us on Crypto in America Live. It's David Kerr. He's the principal of advisory firm Cowrie. David, welcome on. We're so excited to have you.
Hey, thanks for having me.
Of course.
Thanks for coming on.
Yeah, no, we're super excited to have you. We're talking about a topic today that some of our viewers might know about, some might not. And it's the Wyoming DUNAs. And I know we have a graphic to display this, our DeFi dictionary. What is a DUNA? It is a decentralized, unincorporated nonprofit association. And basically, to my understanding, it's a new legal structure giving DAOs recognition while preserving their decentralized governance, legal recognition. Am I wrong? Or is there a better way of explaining it, David? You're the expert.
No, that's more or less right. Sorry, I started my career in gaming, so I'm still on the Polymarket gaming discussion. Transition to DUNA. I mean, I think maybe the one tweak is the DUNA is new. The underlying law that it's based off of, that's a subtype of, is not. The Unincorporated Nonprofit Association, historically under the common law, was treated as the opposite side of the same coin of general partnerships. And so under the common law, they were not given the ability to contract, to sue, be sued in their own name, to hold property. There was just a lot of difficulties with how two or more people kind of come together in a common association. And so in the 90s, the NAICL, the Uniform Acts Commission, tried to kind of provide some clarity to what had been a very ambiguous area of the law, a very difficult area of the law to manage. They caught up some of the statutory interpretation that existed in various states, some of the judicial doctrine, and they put forward the Uniform Act for Unincorporated Nonprofit Associations that permeated through a couple different variations. About half the states have adopted that. And the Wyoming DUNA very closely adheres to the Wyoming UNA. A DUNA in Wyoming doesn't provide any more benefits than you would find under the existing UNA. It doesn't provide any protections you wouldn't find under the existing UNA. What it does, the reason it's significantly longer, is it provides a lot of clarity for somewhat ambiguous area to provide kind of a backdrop for how it would work, utilizing blockchain technology. And so the issue with utilizing the UNA and domestic entities generally is that in the United States, most of our entity forms tend to follow, the common law around corporate structure. And so centralized governance is kind of essential to how a lot of our protections work inside of entity forms in America. Now, there are limited partnerships, and there's been evolutions on this front. The LLC is a hybrid entity form that's been around for around 60 years. But the general idea behind it is it's very common within our entity forms for someone to kind of be in control or for everyone to be in control. And so that's a difficult line to fit a decentralized entity, a governance token controlling a common asset, making maybe some decisions around how a protocol functions. That's not an inherently easy and structured operation to find a home in the United States. And so when we first started looking at this, the Unincorporated Nonprofit Association stood out as being a vehicle for decentralized governance. It was designed to kind of make informal organizations have a home under the law, provide them some protections that we're used to seeing in traditional corporate structures. And more or less, you could theoretically say it was solved based off of the functionality of the UNA. But given we've already discussed on this call somewhat of the regulatory uncertainty, projects in a general sense, and rightfully so, were very hesitant to adopt a somewhat obscure, area of the law and build their operations around the Unincorporated Nonprofit Association. Because if that were to be decided, that wouldn't be a good path. It could easily be taken away. And so what Wyoming really did with the DUNA is they invited projects to come to the United States to give them some certainty that their entity structure would be respected, that the government in place was interested in developing the technology at hand. And so a lot of ways, Wyoming DUNA is an invitation to come to the United States, and it builds on some longstanding existing law.
Yeah. So David, we've been talking about this, I think, for a couple of years, just in terms of how do you onshore projects? How do you protect DAO developers? And you mentioned sort of the willingness of Wyoming, and we've seen that across the board, right? They went with the DAO LLC law. It didn't really pick up the way I think they maybe wanted it to. There's a few structures out there. I've talked about limited cooperative associations before, but they seem to be a real test bed of wanting innovation in the state. They obviously had the Wyoming stablecoin come out. What was it like approaching, you mentioned the common law precedent for the UNAs as like a sort of like a grease the wheels here in terms of having some guidelines to build this. And then what was it like? The big sort of timely announcement here is obviously Uniswap adopted this structure, and Syndicate also decided to put this product kind of out into market. So what was it like working with Wyoming early on? And then what was it like going out and actually talking to, and I'm sure you're still having tons of these conversations, talking to projects who actually want to come to the US and bring these things on chain with a DUNA structure?
Yeah, working with Wyoming just kind of stands apart as being a very kind of unique and surprising and amazing experience. They have an existing committee. The Wyoming legislature is a volunteer position, and they actually, on their own time, volunteer to be part of various committees, so they can do a lot of the pre-work necessary to move legislation through. So they have a lot of out of session committee work where they can make recommendations to help streamline the legislative process and do a lot of the work outside of sessions so they can really dig into it. And it's actually very cool. They do that kind of on a satellite rotation. They go to different towns inside Wyoming to make legislation more accessible to the vast geographic and small population area of Wyoming. They move to the different city centers so people can attend in person during that off season. So it's a real commitment from the legislatures. The blockchain committee, there's a developing technology committee, was the group that had kind of reached out to us as being interested in us, in this case being me and Miles Jennings of A16Z. We had kind of done a lot of writing on the UNAs and the DUNAs. They were familiar with our work, and they reached out for us to come and speak to them about the viability for that to be incorporated into Wyoming law. And Senator Rothfuss is the Senate head of that committee. At the time, Cyrus Western was the representative, and now my Cheyenne representative Singh is kind of Cyrus's replacement. But what really stood out from working with them is they understood the technology before we started. And so when you go before state legislatures in general, you're going to get accused of, Sam Bankman-Fried. When you speak to crypto, you're going to have to take on a significant amount of the negative press. You're going to have to take on a significant lift for the entire industry, whether you're talking about, governance tokens and DUNAs. There's not a separation when you're speaking to state legislatures. They, for the most part, don't really know what Bitcoin is, and everything needs to start with a conversation about Bitcoin and all the harms and negative activity that exists inside crypto is inherently part of that conversation. In Wyoming, it was extraordinarily different. They had crypto, they understood how to use it, they understood the technology, and they also understood the existing Wyoming law. And so they were very comfortable with the fact that it was not a land grab, it was not this major extension of privileges. It really resonated with them that it was about finding clarity and trying to provide some railways for how this would be utilized. It was fantastic working with Wyoming.
Yeah, David, I also wanted to ask you kind of about your, I guess, bigger outlook on all of this, right? So on August 26, Syndicate unveiled the Syndicate Network Collective, which I'm sure you're aware of, which is one of the first DUNAs to go live. Do you think this will kind of start revving up the number of DAOs wanting to shift to this model? And if so, what will it kind of take for them to become these DUNAs?
Yeah, I mean, at the end of the day, I think one of the areas that's always made talking about this very difficult is terminology. When we even start with what is a DAO, you get so many of those early stage enthusiasms from 3 or 4 years ago where it was about, social dynamics, representative democracy. And a lot of times, it's fine that DAO is a rather ambiguous term. But at the end of the day, I think a lot of times we're dealing with blockchain technology. We all point to, the industry has a habit of pointing to the blockchain as some kind of magical change. Like, oh, it's the first time projects could come together and have a, common control over an asset is a very common statement in the DAOs. And it's like, what, because telephones didn't exist, because the internet didn't exist? Like, a lot of the times it's not that different. What makes some of the DAOs different is their affiliation with a protocol, an autonomous set of code that operates, in a lot of ways independent of the organization of governance token holders. They have control over a treasury. That treasury is to be used to further the protocol through governance decisions and that's kind of where the association starts. They might also have some control over the smart contracts. And so when you start kind of thinking about, well, what does that kind of project look like? That's the infrastructure for Web3. That's your Uniswaps, that's your syndicates. It's the people providing a baseline technical functionality that people can access through the protocol. And then also they join a community in furtherance of that protocol. And so what I'd say is these projects that fit this A16Z calls the network token, what we used to call the protocol DAOs, there's a subset of very important infrastructure technology where the governance token is kind of an open question. Because on one hand, you have the protocol, which the governance token may not have that much control over. And then you have this very large store of value in the treasury where a lot of people are coming together to make decisions for how that should be used. The compliance questions around that are fairly massive. If we look at the solutions we did to kind of avoid the regulatory overreach of the SEC from 4 years ago, we started looking to a lot of foreign structures that are ultimately very centralized. The general idea is that the governance vote isn't the controlling thing. They provide suggestions, and then a foundation of 1 to 3 to 5 people actually is control of 30% of the value. So if you think about it from a logical construct, did that work? No, that's not a decentralization. It's a total disconnect. It's an exceedingly centralized offset off to the side. The best case example of that would be something like Uniswap Foundation, which was take a large amount of token grants and has done a lot of good and a lot of work, but they are a centralized group for how they utilize that token. What the DAO enables is more control over the treasury. It provides clarity around protections on the liability side. And it also provides a vehicle for financial statements to be prepared, tax returns to be prepared, compliance steps to demonstrably be met. And so what I would say, more so than even these initial announcements in the buzz, is on October 15th, when Syndicate's financials come out, when Uniswap makes its first financial disclosures, and there's significant and robust financial statements and tax methodology laid out on the return, I think it's going to be a game changer for the insight, because it's very common to say, oh, well, it's all available on the blockchain. We have this kind of default, like a single ledger accounting is somehow a very useful thing. And it's always all available on the blockchain. Well, the ins and outs over time aren't particularly useful. Having financial statements that are in a form we're used to, that are validated through the blockchain, that's going to be a game changer in terms of financial transparency, in terms of involvement in these organizations. And so I think what we're starting to see is a trend towards, more easy, more closely aligned to operations, any forms that will work, but also a more standardized and kind of needed financial transparency around these organizations.
David, before we let you go, I have to ask, have you been working with lawmakers at all to ensure that DUNAs are included in the upcoming market structure legislation?
I would say that the DUNA certainly adheres closely to the vision laid out in the House Clarity. I think I have a strong preference for the House Clarity over the Senate version, based off of the fact that it tends to take projects that are, in my opinion, the most essential, the infrastructure layer protocol DAOs, and makes them a little harder to parse for what their treatment would be, and completely greenlights some less additive tokens. I think the House bill did the work. I think they took the time to do it correctly, and I think we should follow their approach. And in that regard, I think the DUNA would work much better in the House approach, because it aligns with the same principles that I think the House Clarity utilized when it came up with this construction.
Got it. Well, David, thank you so much for joining us on Crypto in America Live today.
Yep.
Thanks,
Good
Sean.
to see you. Thanks.
All righty. Well, the Commerce Department is bringing GDP data on chain, and it's tapping Pyth, a leading blockchain oracle provider. And this makes the nation's total oracle provider, but this makes the total economic output directly available on chain. So the GDP is the nation's total economic output, right? It's going to make it totally available to see on the blockchain. And this will make the Trump administration the first to use this technology in this way. So joining us now is Mike Cahill. He's the CEO of Douro Labs, which leads development and growth of Pyth Network. Mike, welcome to the show.
Thanks so much for having me on. Excited to be here.
Yes.
Hey, Mike, you also got the white t-shirt memo.
Oh my gosh.
Oh, yeah.
One who did.
David also had a white shirt on. Ellie, we're going to have to get you on for the next episode.
Uniform,
Yeah, thanks for sending it over in the mail beforehand.
Yeah,
Appreciate
of course. Of course. To start off, Mike, how did this partnership with the DOC come about? Kind of tell us about the process and really what went into it.
Yeah, first, I mean, it's pretty amazing, huh? I would not have expected this 12 months ago. Probably not even, I guess like 10 months ago. So when the administration changed, it was pretty important for us to start kind of making rounds around DC. And we've been doing that for a while now. And there's a lot of interest with the presidential working group, helping them obviously understand the markets better, helping put together the white paper that they did. And then there was a lot of interest in where there could be tangible usage of blockchain technology. And so we started exploring this with a host of different entities and government organizations, and where we got the most interest was the Department of Commerce. And I would say that the background for it is probably around the fact that it's uniquely led by Secretary Lutnick, who has gotten experience at Cantor being able to take the treasury markets and really kind of see them move into an electronic form. When we explained, how this cryptographic signature and distribution of data really unlocks the ability to use smart contracts. That was the moment where I think the analog just kind of clicked for him in the department. And from there, we've been working making it happen. And so it's taken us about 2 months to do. Obviously, there's been two things that he did. So the first, which you folks correctly pointed out, the data is published over the Pyth Network Pyth Network to be made available to over 100 blockchains, and then you can use that in any kind of smart contract application. It's cryptographically signed and usable. The other thing they did was a little more symbolic, and so this was something that we actually worked with them a little bit on, which was publishing the data in the hash and then signing it directly. This is kind of the flagpole moment, I think, landing on the moon, to show that, number one, they had the intent and interest to do this, but number two, they actually had the technical capabilities of doing so. And that's why there were so many different exchanges that were mentioned in the press release. They actually had to accumulate some of the tokens to be able to pay for gas. So I think that's really exciting to do as well, to see that the government is actually literally using the blockchain as opposed to just like kind of finding great partners. So those are two kind of big milestones for us. We've since expanded, and as of today, now we've got much more data. We've got the jobs data, we've got inflation, and some sort of some of the producer data as well. So we'll continue to expand this side of economic data on blockchains, but it's a great first step.
Yeah. So Mike, on this point, first of all, congrats. It's very cool to see the industry working this closely with folks in the administration, and I know Secretary Lutnick has been a big fan of the industry for a while. On like Pyth's role when we're talking about data on the blockchain, we're kind of weighing this balance all the time about like speed and immutability, right? Like you mentioned paying gas fees, right? So if we tried to do this on Bitcoin, for our viewers, that would basically be like impossible. And so obviously Bitcoin, like not a data oracle, but just to draw the comparison, what do you think is unique about Pyth in their ability to work with like this volume of data and then like do it efficiently? Like how did that conversation go in sort of explaining the value prop to the Department of Commerce, which is a crazy thing to say?
Yeah. There's like two components of it, and so there's like the what are we doing today, and then the other one is what could we potentially do in the future. So I'll start with like the what are we doing today, which is the publishing of a pre-digested or pre-compiled piece of data and putting it on the blockchain in a cryptographically proven way. And so, where Pyth stands out in its ability to provide data is really always been around the availability of a high amount of data. So like a huge breadth of types of data. So I think we've got about 2,000 different instruments today, and very low latency. So we initially started out on a Solana mainnet with 400 millisecond update times. We've since gotten down to like 1 millisecond update times. So we're constantly trying to reform the system, and that was something that was really important to them. The economic data from the U.S., GDP, jobs, payrolls, the initial jobless claims, those sorts of things are obviously market moving, and there are there's a whole lot of money that rests within the latency of it. So being able to demonstrate that we can do this kind of instantaneously was really important. And so we've always had this ethos of being faster than the fastest blockchains, and that's why we started on Solana, and we've since had to move to something called PythNet, which is now much faster. And that's how we've gotten down to 1 millisecond because there are faster blockchains. There's Hyperliquid and many more to come as well. And so, that's just like the cost of doing business if you're in this Oracle space. Like you have to continuously provide trust, but you have to make sure that you're being able to do so at these expedited speeds. So that's number one. Like how do we get data onto the blockchains, and like how do you do it in a trustworthy way? But what's really cool is there's appetite. Obviously, it's no secret that there's been some changes over at the Bureau of Labor Statistics. There are conversations around how do you rework data, add transparency. I think there's an administration that is very open to transparency. They film all the cabinet meetings. They publish a lot of stuff that I don't know if they necessarily did in previous administrations, but there's certainly a bent towards that. Now, when we describe the architecture of how Pyth works and in other asset classes, so for example, say the price of Tesla, it consists of exchanges like Cboe Global Markets, IEX, MEMX, MIAX, but also trading firms. So like Virtu, Jane Street, Susquehanna, DRW, Jump, all submitting data that they own. And then we compile that together and we create like a universal price with a best bid, a best offer, some confidence interval. It's cool. It's the first time anyone has created for institutions, by institutions, a data feed that doesn't exist in the confines of like a single exchange and doesn't have to go through a bundler or a distributor like a Bloomberg. Now that was really exciting to them because where they get most of their data from, which is the Bureau of Economic Activity that sits within Commerce, is usually from some upstream service. So it could be the census. Now the census is obviously modernizing, but there are ways that you can do this using blockchains that look and feel like the way that Pyth has created new price feeds. So you can go directly to people that have data, like stores and like large economic players, and you can get more streamlined information. That conversation is in its earliest days, but I was certainly surprised with the level of appetite that they had to entertain this and to try and pursue this. So that's very exciting to me because I think that this is a way that we actually move things forward as opposed to just go and do the composability thing, because that's great and that's kind of what I had anticipated happening. But the appetite they have is like, let's just go modernize our entire infrastructure and let's use the best tools that are available to us.
Taylor, I'm going to call for the Howard Lutnick soundbite just to off this final question to Mike here.
The Commerce Department, together with the President of the United States of America, have now put these record GDP numbers on the blockchain. So you've got the crypto president with the greatest $30 trillion economy in the world putting out those numbers on the blockchain. This is how the golden age feels.
He's such a new blocker.
Get goosebumps.
Right? How does that feel to be a part of that initiative?
I mean, it feels incredible. It's a very impressive group of people that he's got in the cabinet. And there is no uncertainty around wanting to make our industry successful and to make the US the leader in financial innovation and blockchain technologies. So that is abundantly clear. I was just in DC yesterday, meeting with various people at the Treasury and at the White House, and it's palatable. Like there is a sense of let's win. Let's not force things through, but like let's use the technology where we can. And it's such a stark contrast from where we were before. And one of the things that I like to think about is the end of the 90s when the internet had all those failed things that didn't come to fruition, or at least not initially, like the pets.com, obviously example. Cut to 10 or 20 years later, of course everyone buys pet food on the internet because you just buy Amazon, you just buy everything there. But those failed things that 5 years later, you're like, oh, I can't believe we were so silly. We were going to think we were going to put all that stuff on, on the internet. Think back 10 years. And people are telling you, oh, we're going to have mortgages on the blockchain. We're going to have, all these these legal contracts on the blockchain. And then in the last 5 years, let's just dial it down. It's going to be mostly stable coins and it's going to be mostly trading. I think that's opened up again. And the fact that we're getting these institutional players, Coinbase, Robinhood, tokenizing stocks, those are big powerhouses now. They weren't necessarily before, but they certainly are now. You've got Goldman Sachs is doing money market funds. A bunch of other institutions are doing money market funds. Just this whole tokenization stuff is all happening. So when people keep asking me about, well, what is the actual use case of the GDP? And now that we've got, inflation has something you can put into an actual smart contract. You can have it adjusted to either a bond or even a mortgage. That sort of stuff I think is now open. I think that we've gotten back into the excitement of not just moving from a decentralized to a decentralized exchange, and perhaps having better UX that we hadn't thought of in the past. But now we're getting to the point where we can reimagine new types of contracts that are being brought in that really embrace this kind of innovation. So I find that the most incredibly exciting part of this.
Yeah, Mike, I just want to clarify that was not a scripted segue that we told you to say, but that was pretty perfect in terms of wrapping up talking about commerce. Congratulations again on the partnership, and we're super excited to talk all things tokenization with you, and of course our next guest here, Alex Zozos of Superstate, who did not make it in that list of cool projects, but we're definitely going to talk to him about all the work they've been doing. So really appreciate you coming on the show.
My pleasure. Thanks for having me.
Thanks, Mike. Yes, well, as As Gerald mentioned, another big story we've been tracking is GLXY Digital becoming the first company to tokenize its shares using the Solana blockchain. It fits into the increasingly popular trend of tokenization, which is obviously we just discussed with Mike, but it's an accelerating trend on Wall Street as well. So to talk more on this, let's bring in Alex Zozos, the general counsel at fintech company Superstate, to discuss its partnership with GLXY Digital offering GLXY on the Solana blockchain. Alex, welcome to the show.
So happy to be here, and yeah, that was like a pep talk from Mike there, and happy to dive in and chat further. Just want to preface this as also say, go Birds for all those celebrating now that football season is upon us. But yeah.
Exciting
That's
times.
hilarious.
That was a
Alex,
close
thank
one
you
last night.
Yeah.
It was a close one. It was a late one, so I'm glad the taping of this is a little bit later in the afternoon as well.
A midday show for
we don't like
our Friday friends. Yeah. Alex, we would love to kind of get a rundown from you. Obviously, starting on Wednesday, GLXY stockholders can tokenize their shares using Superstate's opening bell platform. Yes, this sounds very cool in theory, and there's a lot of talk out there about tokenization, but why does it actually matter to tokenize these stocks? And how do you how do you see this changing the way adoption transpires in the industry?
Yeah, I mean, again, so happy to be here. And I would say it is such an exciting time in the space. And what we did on Wednesday is a significant milestone in bringing to fruition, what Chairman Atkins announced in Project Crypto, which is bringing the analog markets on chain. And so what we did at Superstate with our opening bell platform in partnering with GLXY is actually brought real shares. Like instead of opening up your Robinhood account, you're opening up your self-custodial wallet, and the exact same shares are now available in your self-custodial wallet. And so this is a seminal point because as alluded to, like tokenization can mean a few different things to a few different people. But what we mean by tokenization is really evolving the ownership format and bringing the actual shares on chain. And we're doing this through opening bell as the transfer agent. And so what that means is you can choose to have your share in a few ownership formats. One of them, the new one that we're enabling, is this tokenized version, which enables you to move them around and then leverage the DeFi primitives that exist that have been built up over the next 10 years. Over the last 10 years. So there's a lot that can come from this, but from a starting point, we've tokenized the shares of GLXY, and would love to get into where that can lead and what we're thinking.
Yeah. So Alex, I want to take a step back. We've had this conversation before about, even towards the beginning of the year, there was this debate about what's going to happen first, right? Are we going to get a lot more crypto products into TradFi wrappers, or are we going to get tokenization of traditional financial products like securities? And you guys at Superstate have always believed in this mission of, the ability to tokenize. We saw a lot of momentum with the ETFs, trading, underlying crypto assets. We've seen this kind of DApp mania. We then saw, as Mike mentioned, kind of Robinhood and Republic put these private secondary tokens out there. I think they call them mirror tokens, but not necessarily truly tokenized public equities. What was it like working with GLXY, and what makes Superstate unique in the ability to actually bring a publicly traded equity on chain? Like, and just what's different about that process for you guys?
Yeah, I mean, I welcome all forms of innovation. Obviously, Commissioner Peirce has come out with some statements that's, talking about how a security is a security, and just because you say you put it on a blockchain doesn't change, its obligations in nature. But the way others are kind of approaching the way that some others are approaching tokenization is kind of having a separate or derivative token that provides more or less economic exposure, rather than as if you actually own the underlying shares. And this is where I think, some people have called them like so-called securities, or call them wrappers or things like that. We think that carries forward a lot of the risks from TradFi with regard to settlement risks and counterparty risk, and does introduce, fragmentation. Whereas what we're doing is actually creating a direct registration, essentially, of the shares in your name on the books and records of the issuer. And so there's a trade-off there where we do need to comply with securities laws and regs. And so there is some permissioning that's there. The uptick is going to be a little bit slower because we need to work directly with issuers. But we think the payoff is really going back to your first point on which direction are things going. Are they going from on-chain to the traditional markets, or from the traditional markets on-chain? I think that's going bi-directional right now, given the posturing change. And with the model that we're proposing, it allows not for that, bi-directional movement to really become a bridge. And so, like, to the extent you tokenize your shares, your GLXY shares, and we're working with many other issuers to roll this out further at Superstate. But to the extent you tokenize your shares, you can de-tokenize your shares and change those back and take them back into TradFi. And so, like, that is how we view this evolution to evolve, really, is to not fully displace, but create additional alternatives. And so we think, we're in alignment with the commission, let the market decide. And that's really going to be, is TradFi and the intermediated infrastructure, is that where we think things should go and stay? Or is this new, innovative, blockchain-led technology, is there additional utility there? Is there more direct ownership? Is that where we think people will want to go? Obviously, like, for right now, it's limited in what you can do. With GLXY, we've only unlocked, peer-to-peer transactions, but even that is such a crazy unlock, right? Like, imagine like going in and trying to send a share of anything to anyone else, right? Like, you can't do that because you have to go through like 6 different layers of intermediaries. And so, like, even now, just having the shares on your self-custodial wallet and enabling the ability to transfer on a peer-to-peer basis is fantastic. But we're definitely viewing this as a starting point because we're working directly with the crypto task force. We're part of this initiative coalition called Project Open, where we're working with a number of industry players in the Solana ecosystem to bring to bear, in a fully regulated way, the financial primitives that exist on chain, like automated market makers. And that's like fully different and unique, that doesn't exist in TradFi. And so we're providing the bridge as this transfer agent to allow you both as an issuer and as an investor to say, hey, I want to tokenize my shares. And these aren't digital twins. These aren't anything. These are like the exact same share that you would have. And then once we, get regulatory comfort, really allow for the tools and the use cases that have been evolving over time to use those with more, intrinsic value securities and assets. And so, like, right now, the crypto market is 3 trillion and like the traditional market is 60 trillion. We think there's really, at the end of the day, it's going to be like the entire market has the additional choice, and all of that is going to be combined into one pie.
And then we got to get Pyth to bring Edgar on chain, right? Is that that's the next?
Oh, yeah. You go full circle. Yeah.
Of course, right? I mean, I think, look, I look at the traditional financial system and the like wait but why type mindset, right? And like, there's so many ways when you peel back onions and you try the onion and try and understand, like, but wait, but why do we do something in this way? Wait, but why do we do this? And like, that's like, there's seminal moments in market structure history. Like, one of those was alluded to by Chairman Atkins in his Project Crypto speech, was the paperwork crisis. And that kind of created a fork. And what we're doing is, which essentially said, hey, we don't have a way or technology to enable the ability to transact these in a decentralized way. So let's put everything in one big box, and let's just like get comfortable with that. You not really owning your shares, you just having a security entitlement like 6 degrees away from the issuer. And what we're doing now is saying, we can provide an alternative for you, and you can be directly on the books and records of an issuer. In this case, GLXY, but again, we're working with many other issuers, and we're saying you can do that, and then you can do a bunch of different fun and interesting things on chain. So we're excited about what the future has in store for this. And we're, very excited about what, the SEC and Chairman Atkins has described within Project Crypto, and the task force and Hester Peirce have kind of alluded to as well.
Yeah. Alex, just quickly before we wrap up, I'm curious, do you see Solana becoming the primary chain for all these tokenized assets on Wall Street, or is this going to be still a multi-chain story?
I mean, we're chain agnostic. We think Solana is a fantastic chain to have all of this activity to exist, but we believe in allowing investors to choose which chain they want to be on and operate within. But yeah, I mean, look, Solana has all the key attributes to allow that to scale and grow. So I think Solana is definitely a front runner. Obviously, there's a lot of activity that also has happened on Ethereum. And then obviously there's many other L1 chains that can also gain a foothold as well. So we don't think, not to quote a past chair, but we believe that we should be technology neutral, right? And so if you want to have your shares be in a centralized database off-chain, that works, right? Additionally, if you want them to be on an Ethereum network or a Solana network or whichever other network, we will enable and support those choices and that liquidity and use cases within that ecosystem to evolve. And so in the same way you can detokenize, you can also move cross-chain with our opening bell product at Superstate. So there's a lot of different avenues and choice that is going to develop. And I think it's up to the market to decide.
Exciting times. Well, congratulations.
Go ahead, Alex, please. We always do this.
I know, we always, yeah. Thank you for coming on. We appreciate it. And
thank you so much.
See you soon.
Yeah, thanks for joining us. First live episode. Obviously, it's live from that outro. And thank you to everybody tuning in. And we'll look forward to the next one. Appreciate it, Alex.
Yeah.
Thank you.
That does it for our first live episode of Crypto in America. If you guys stayed for the whole episode, we love you, and we'll be sending you a gift in the mail. Not really. Not a legal obligation.
Not really. Our lawyer will stop us. Yeah.
Thank you for tuning in, and we will see you next Friday, same time, same place. Have a wonderful weekend.
Thanks, guys.
See you guys.